Hello, I am Malaran. In this video, we will look into the risks and challenges of tokenizing real-world assets. In various previous videos, we talked about digital tokens, how we can able to create digital tokens from the real-world asset, and we can trade in various blockchains. If you need to know more about the fundamentals of digital tokenization or asset tokenization, go and visit those videos, and we will also provide links in this video so that you can understand more. So there are a lot of regulatory challenges the crypto industry is facing in the digitization of the real world assets. So even though there are various standards are all coming up among various countries, all these rules and regulations are all fragmented at best, and there are still a lot of details needs to be incorporated so that the asset providers, the digital asset providers can able to follow the standards and implement it fully, because all these standards are relatively new and it is coming up across the world. If you take the MiCA stablecoin standard, it's basically a market in crypto assets created by the European Union, and that is going to be followed all over the countries within the Euro region. And then there is a CASP rule that is being created. It's a crypto asset service provider rule, basically. That rule mandates what to do, what not to do in the digital tokenization. And the UK created the Digital Securities Sandbox rule that monitors and manages the digital trading in the crypto. And in US, recently the current government passed the Genius Act. We discussed about this exclusively in various videos. You can go and look and understand more if you want to go into the details of the Genius Act. It basically covers the stable coin that is based on US dollars. And then there is a FATF trade rule. It's basically the Finance Action Task Force rule. These rules mandates, it's an international rule. It mandates both the sender and receiver. Whenever the sender and receiver are in different countries, what are all the rules and regulation they need to follow? So that is a cross-border compliance that is being created. So bottom line is that there are a lot of initiatives coming up in within the blockchain community across the world, but as I said earlier, all these are all fragmented and there is no clear connections between these standards. Eventually, there are going to be more and more regulations so that ultimately the consumers will be protected, those who are going to use the tokenization of their assets, because it's a multi-trillion opportunity for all the businesses. Everybody wants to tokenize their asset and they can able to sell it internationally across the people all over the world. But that comes with the challenge of regulation, because once you invest in one token, you want to make sure that your money is protected. So all these regulations are all going to help us to have more trust in the blockchain industry in the coming months and years. And the main issue in the tokenization is the security risks. As you all know, in the blockchain, yeah, if the transaction needs to be executed, it needs to have a smart contract. It's called in Ethereum smart contract. It is a biggest platform, and the companies needs to make sure that the security is being uh, kept properly within the smart contract so that unauthorized access or anybody who has the internal knowledge can hack into the system. So that is the foremost thing in the security of the contracts. There needs to be an independent audit and formal verification, mathematical verification that needs to happen within the blockchain industry. There are stable coins, there are blockchains exist, those who follow this, but it is not fully developed and it is ongoing research that is happening, and eventually it will be protected once for good. and and also the safety and security of the private keys, the individual consumers want it. There are security standards are all coming up. There is a hardware based security, and there is a wallet based security, and international standards and the local standards are all coming up from the regulation side. And also from the technology side, there are new technologies are created to safeguard the private keys, because once whoever owns the private key, then they can able to get all the tokens, pretty much everything from the blockchain, because the entire cryptographic industry is based on the public key and private key, and whoever has the private key, they can able to get all the money, pretty much everything from the blockchain. So there are technologies are coming up to safeguard the private key, and also the privacy versus the transparency issue. You need to make sure that identity, whoever the identity is the correct identity, to formally verify without knowing the information. So we discussed about the ZK security in multiple different videos. If you need to know more about it, please go and watch those videos. The zero knowledge proof, the ZK, is very critical in the crypto, and that is being developed. And in the coming years, there will be more technology, more innovation will happen so that it will be fully implemented across the blockchains. And another critical factor about the blockchain is every blockchain is it's a standalone ledger. There is no connectivity to the public world, because that is the only way they can able to make it secure. But blockchain needs to access world informations that are not part of that blockchain. So that's where the Oracle comes into the picture. So using Oracle, blockchain can able to securely verify the transaction, whatever the data that comes in the transaction is valid, and it could be, or it is fraudulent. So all those technological changes needs to be properly integrated with the blockchain, so that consumers transactions will be properly verified and it properly stored, so that in the future, if anybody wants to view it, they can able to view and they can able to understand what exactly happened within that blockchain. So for that, Oracle integration is very critical for the success of the blockchain, especially in the tokenization of the real world assets. There needs to be a Oracle integration with the blockchain, where Oracle verifies various public transactions and can able to give you a correct answer to the blockchain, so that the blockchain can store the transaction for the future reference. And another critical challenge is the liquidity challenge that always pops up in the crypto world. There are 60, 70 different blockchains exist. There will be more than 100 pretty soon, because everybody is coming up with their own blockchain. And the challenge is that these blockchains, some of the blockchains are really niche blockchains. It's really small. There is no interactivity or interoperable blockchains. For example, if you have a blockchain, if you are interacting with the blockchain, having a transaction in Ethereum, you can able to transact with multiple other blockchains. You can't send the money from Ethereum blockchain to all the blockchains. Yes, Ethereum is the very popular, one among the popular blockchains. There are integration exist, but it's not all the 60 networks are all interconnected. So there is a fragmentation exist. And if we are using a smaller blockchain, then it is very difficult for you to send money from that blockchain to a different blockchain. So that's a fragmentation issue, and that's being addressed. There are new technologies are coming up so that all the blockchains can be integrated. And then there is a issue with the secondary markets and valuation for the tokens, or for the transaction that you have it in a niche blockchains. Say, for example, if you have some money involved, you bought some tokens from a niche blockchain, and if there is no secondary market, then whatever money you bought in, the tokens that you have, that's been locked. If there is no secondary market and nobody is going to buy it from you, so your money is locked, and because of that, You cannot get new customers getting into the niche blockchain. So those are all the issues that's being addressed in the crypto world, and there are interconnections are happening so that you can able to have the money from one blockchain and you can able to transfer it into a different blockchain. And another important aspect is the settlement. In the cash leg for settlement is very critical in the crypto world for asset transactions. So once you purchase the asset from the blockchain, or once you sell a blockchain, you need to make sure that whoever the owner of the token receives the money in the fiat currency world. Since the integrations are all happening, if it takes days and weeks for the either the sender or receiver to get the money in the fiat currency, that's going to create a lot more challenges. So there are new rules and regulations and the technologies are coming up, and in the near future, those things will be fixed. And another important aspect is the institutional adoption of the tokenization. Now in US, more and more institutional vendors and companies are getting into the blockchain world. For example, BlackRock, they have asset class called BUIDL. Using that, you can able to purchase assets using the blockchain tokenized funds. And Franklin Templeton, they are also getting into, they already got into the money market funds. We can able to purchase the tokens from their blockchain. And similarly, the Goldman Sachs, they have their own asset class to support the blockchain crypto customers. And also another important project that's coming up is the market plumbing pilots. There is a BIS project. It's Agora's Explorer tokenized bank deposits that's being created where all the banks can integrate with the central banks to exchange money and tokens with the central banks with the non-centralized banks. That standards are all coming up. Again, all those are all in the beginning stage. Eventually, these technologies, these regulations will mature, and that's going to help the consumers. And what are the practical risk mitigations we can able to understand before buying the crypto tokenized assets? The challenges are all there, and there are regulations are coming. We talked about MiCA and then the Genius Act, and also we talked about the travel rule ready flows that we can able to use it for our advantage to understand if a blockchain supports these rules and what are all the flaws in it before getting into purchasing any tokens. And also the contracts needs to be secure, and there needs to be an independent verification of the contract so that the blockchain itself is secure, so that no unauthorized access, no people can able to log in without proper security into the blockchain for fraudulent transaction, and the ZK privacy that needs to be there. And also there needs to be a proper integration with the fiat currency, traditional marketing system with the blockchain, so that any transaction that happens within the blockchain, if the transaction needs to come to the traditional banking system, that needs to happen. And that's what we talked about, multiple different blockchain that are supporting this. And if you need to know more about the specific blockchains or the specific tokens, you can able to use it that nicely integrates with the blockchain and traditional finance. You can go and watch our previous videos, and we will also provide link in this video so that you can able to understand more. So all those helps the customers to have a 24/7 settlement so that you don't have to wait for days and weeks for your settlement. It will happen instantly from blockchain to traditional finance and from traditional finance to bank. And the interoperability. And interoperability is a critical challenge. There are multiple different blockchains, and without proper technology, it's very difficult for consumers using a niche blockchain to send and receive transaction. And the technologies and standards are coming up to integrate all the blockchains so that it could be any traditional bank. If you go and if you want to transfer money from one bank to another bank within the same country, same city or different country, you can able to do it. Yes, it takes time, but that integration already happened. And the same type of integration is going to happen in the blockchain so that all the blockchains can interrupt and talk to each other for sending and receiving money. And then in the conclusion, we talked about the real world asset, RWA, the real world assets are all getting popular all over the world within the crypto industry. And the standards are all coming up to support the growth and ultimately protect the customer interest and customer money that is being used in the purchasing the traditional and also blockchain assets. The tokenized funds and deposit tokens are all being used by the institutional investors, and it's being created by the big banks and companies all over the world. And in the near future, it's going to increase as and more people getting into the crypto world and start purchasing tokens and assets. So the compliances are all being created, the regulations are being created, and the technology is also going up, improving. And with the combination of these technological changes and the regulatory creation, these two are going to bridge together, and ultimately it's going to increase the adoption of the tokenization of assets within the crypto world among the consumers. So that's all I want to discuss in this video. If you have any questions or comments, please let us know. We will be happy to help you. And also, please subscribe to this video and help us to grow this channel. Thank you. Bye.